All right, so this is a leasing question, and it gets to the point of whether you know the difference of an operating lease versus a type of capital lease. Compared to using a financing lease, a lessee that makes use of an operating lease will most likely report a higher. Now, the lessee, the person that doesn't own the asset, that's the leaseor. The lessee is the one that gets the asset, gets to use it, and pays a leasing fee or a rent expense. And if it's an operating lease and not a capital lease, then you don't have to write a loan and an asset on the books. You don't actually take it and say, oh, this is the same as buying an asset. It's an operating lease. So you don't have to do that. All you have is rent expense. And so a company with an operating lease will most likely report higher debt. The answer to that is wrong. They won't have a higher debt. Rent expense, that's probably right. Cash flow from operating activity. No, that's probably wrong, because what you're doing is you're using rent, right? Rent, it all of a sudden, if you had a long-term loan or something like that you were paying off, that would go into your financing activities. And so your operating activities doesn't have the benefit of that being in your financing activities because you're paying rent. Because you're paying rent, it's counted as an operating activity. So your cash flow from operating activities would be lower. Rent expense is the correct answer. So B is the correct answer on that one.